The FTX crisis appears to be just getting started as it spreads throughout the cryptocurrency industry. This week saw the spectacular failure of the world's second-largest cryptocurrency exchange, which some participants in the ecosystem considered too big to fail. The exchange filed for bankruptcy on Friday morning and announced the resignation of its founder and CEO, Sam Bankman-Fried, also known as SBF. It's the last day of a terrible week for the firm that was once worth $32 billion and was one of the most powerful players in the cryptocurrency industry. Currently, the company's stock price is at an all-time low. Welcome to Crypto News. Today, we will talk about how Binance destroyed FTX. Stay with us until the end of the video to learn more. Like and subscribe to this channel and hit the bell button to get notified of all the latest updates. Let's jump to the topic. Over the past 2 weeks, the digital assets sector has watched horror as FTX, the multi-billion-dollar cryptocurrency exchange built by one of its largest and brightest stars, Sam Bankman-Fried, crashed. FTX was one of the industry's greatest and brightest stars. The failure of FTX caused tremors that were felt throughout the ecosystem. As investors raced to get out of potentially dangerous holdings, token prices fell across the board. After that, the contagion spread. Amid the panic, depositors hurried to withdraw their money from various cryptocurrency platforms. As a result, lenders were forced to block withdrawals, which one market observer described as going on death watch. Overnight, Bankman-Fried transformed from a good guy into a bad guy. How did we get here? And what about the future of crypto? If you're just tuning in, here's everything you need to know about what's happening in the tale, which is far from over. A brief review. The cryptocurrency industry publication CoinDesk published an article on November 2 that used a stolen financial document to raise issues about the nature of the link between FTX and Bankman-Fried's house, Alameda. On paper, they were two distinct businesses, even though they were both owned by the same individual. However, the article published on CoinDesk stated that Alameda rests on a foundation that is mostly made up of a coin that a sister firm produced. A few days later, the CEO of FTX's most significant competitor, Binance, announced that his business would be liquidating FTT, the FTX in-house token, for a total value of $580 million. This sparked a torrent of drawdowns, which FTX could not accommodate due to a lack of available capital. The fear spread, causing a precipitous drop in value for FTT in more mainstream cryptocurrencies like Bitcoin, Ethereum, and Solana. FTX was dealing with a significant liquidity difficulty. It needed a rescue, and for a few moments, it appeared that its competitor Binance, whose depletion had exacerbated the issue, may be the one to come to its aid. However, less than a day after announcing the rescue plan, Binance decided not to follow through with it, citing that FTX's troubles were beyond our control or ability to aid. Bankman-Fried stepped down as CEO of the exchange on November 11, the same day FTX and Alameda filed for bankruptcy protection. In a long apology posted on Twitter, he admitted, "If ******* up." As soon as FTX went down, crypto businesses were flooded with requests from customers attempting to claw back their money. This phenomenon is known as a run on the bank and is analogous to the situation when a bank failed. Because of the liquidity issues they are dealing with, several companies have been obliged to temporarily halt withdrawals. According to Daniel Roberts, editor-in-chief of Decrypt Media, a news site that focuses on cryptocurrency, in the world of cryptocurrencies, the minute you see a company or firm announcing we're temporarily blocking withdrawals, all you can say is yikes. You have placed them on the watch for death now. It is not common for someone to announce, "We are halting withdrawals," and immediately follow that statement with, "Okay, withdrawals back on, we're good." Despite his involvement in the events of the last week, CZ stated that the crypto sector is facing a problem that has never been seen before as a result of the FTX issue. After an online Twitter battle in which CZ accused SBF of allegedly badmouthing him to regulators, the CEO of Binance said on Sunday that the business would dump all of its holdings of FTT, a token used by FTX clients. This came after CZ accused SBF of allegedly badmouthing him to regulators. Following the sale of over $500 million worth of FTT by Binance, users of FTX engaged in a widespread liquidation of their holdings, ultimately resulting in FTX losing all of its liquidity. Binance, FTX's primary competitor, benefited the most from the failure of the rival exchange because it would be able to pick up the pieces and further establish itself as the largest digital asset platform in the world. CZ intervened and made a bid to buy the exchange along with a letter of intent. However, it was swiftly retracted after Binance stated that it had finished its due diligence procedure. This week, it was reported in the Wall Street Journal that SBF had approved the use of billions of dollars worth of customer assets to fund the investment activities of Alameda Research. Alameda Research is a trading firm that is a sister company to FTX, also formed by SBF. On Thursday, he publicly apologized for the issue and accepted responsibility by posting it on Twitter. "I'm sorry. That is the most important aspect." In a message on Twitter, he admitted that he had made a mistake and should have performed more admirably. The failure of FTX follows other recent failures in the cryptocurrency industry, such as those of the stablecoin Terra USD and its sister token Luna, as well as the cryptocurrency lenders Voyager Digital and Celsius. These failures come on the heels of a prolonged crypto winter, which has resulted in a drop in value so far in 2018, increased regulatory scrutiny and the failure of several other components of the cryptocurrency ecosystem. CZ warned that the sheer size of FTX makes this a much bigger deal than other companies that have gone under during the crypto winter, saying, "We've just seen another very big player going down," in reference to the collapse of FTX on Friday. According to what he had to say, a significant amount of consumer trust is damaged, and I think fundamentally that we've been pushed back a few years. The magnitude of FTX's failure has caused eyebrows to be raised in Washington. This is because of years of indecision, government authorities have been unable to formulate definitive legal frameworks for the cryptocurrency business. It is also the latest defeat for Securities and Exchange Commission Chair Gary Gensler, who, according to critics of his agency, did not adequately warn investors about the various disasters that have occurred in the world of cryptocurrencies that have occurred this year. Now regulators will rightfully scrutinize this industry much, much harder, which is probably a good thing, to be honest, said CZ. However, the billionaire was optimistic about the chances of cryptocurrency recovering from its most recent setback. Now regulators will rightfully scrutinize this industry much, much harder. He stated that the market would eventually correct itself. "We're in a brand new field, and many dangers are involved. We need to figure out how to deal with issues like these and how to create an industry that is a lot healthier." If you made it to the end of this video and are interested in knowing more, let us know which part of the video you liked the most in the comments section below. We will appreciate your comment and work to make a video on your desired topic with an account shout-out. Please like and subscribe to the channel and hit the bell button to be notified of our next video. Thanks for watching.